If you guys have any questions during the presentation, please let me know and I'll make sure to answer all the questions. Tonight we will be talking about MACD divergence, and and pivot points. We can use those indicators to find trend reversals. And of course, with those indicators, we can confirm our entries. First, I will show you how to place those indicators on the charts and what settings do we use. Now first, let's start with the MACD. We go to indicators and we use MACD, not the MACD histogram, but MACD. We use default settings 26, 12, and 9. Now there is a lot of ways we can use MACD. I use MACD only for one thing. This is called MACD divergence. It can be used as a leading indicator. Most of the other indicators, if we use crosses or anything else, it's more like a lagging indicator, but the MACD divergence can actually predict and help us determine when trend reversal is going to happen. And the way we use it is, here you guys can see how price is making lower lows. Price is making lower lows, keeps on making lower lows. Now at some point, and at the same time, I will use the vertical line. Look, at the same time, MACD is also making lower lows, the same way price is making lower lows. But at some point, the MACD start making higher lows while price still makes lower lows. This is what we call MACD divergence. And it can be confusing in the beginning because the way we draw MACD divergence, in a downtrend we draw like a trend line from the low to the low, not from the high to the high. Like a normal trend line would be drawn like this over the highs. But in a downtrend, we're looking at the lows. If price is making lower lows, and if at this same time period between this low and this low, the MACD is making higher lows here and here. This is MACD divergence. Now, the less crosses here between those two lows, you see how the MACD is crossing a few times. Here we have a cross, here. The less crosses we have, the better the MACD divergence is. So if we see something like this with just one curve and one cross, it's better than if we see a few swings within those two lows. It's the same way with the price. If price would make just one swing going down, rather than in like this case, price made a few swings. You guys can see we made a swing here. Price made a few swings on its way down. If it made just one swing, would be better the MACD divergence will have higher probability. But even though there was a few swings in this case, you can still see that price did reverse the trend. And this is what MACD divergence does. It tells us, it kind of predicts when there will be a trend reversal. Now we've been in a downtrend. Here we see MACD divergence. Price is making lower low. MACD is making higher low. And the trend is reversing. Now imagine that here, how, of course, a lot of you guys will ask, how do we use this? Well, one thing is, imagine here at this low, this is a 10-minute chart. Imagine that at this level here, this is 46.90, 146.90. We have large, maybe we don't right now, I haven't looked at the chart, but let's say here, actually maybe we do. But let's say that here on the 1 hour chart, and I zoomed out a lot, we have bullish Gartley converging, let's say 786 with 127 at this price of 146.90. So 1 hour chart is telling us, okay, 146.90, we have bullish Gartley and we need to buy. And then we go to the 10-minute chart and we see that between those two lows, price is making bullish MACD divergence, and it's confirming that price is actually going to reverse here at that level. Oh, this is additional confirmation for us, telling us that, okay, yes, this is price level that price may be reversed. And I'm saying reverse because on a smaller time frame, this looks here like a downtrend. Although if we go to a 1 hour chart, it might look like an uptrend. So this is one way we can confirm larger time frame pattern by using MACD divergence on a smaller time frame. Let's say we have bullish head and shoulders on 4 hour chart, and then at the same time we go to 1 hour chart and we see MACD divergence already formed, and we maybe see the MACD divergence after. And most of the time I will try to find a head and shoulders for you guys. But what I can see, what we see a lot of times, I will draw it on the side because it will be a lot easier for me to explain. But let's say this is head and shoulders, right? And price is somewhere here. We are waiting for price to go all the way up here to hit the right shoulder level so we can sell. Price is somewhere here in the middle on its way up. But between those two highs, let's say down at the MACD, we see bearish MACD divergence between exactly those two highs. This is giving us the confirmation that price will turn into a bearish trend at this high. And we may have missed that MACD divergence, or we didn't have any other reason to enter at this level. But later on, we see price forming head and shoulders, and we will say, okay, yes, first price gave us the MACD divergence. Now price is giving us head and shoulders. Well, this is good confirmation that's telling us, okay, price is going to be trading bearish, because first we had the MACD divergence, now Head and Shoulders is also a reversal pattern. Well, this will lead us to only one conclusion, that price will be moving bearish. And this confirms even more that we should sell that right shoulder. Now, after I explain the pivot points, we'll go over the charts, and I will show you actually those examples that I'm drawing. I will show it on the actual charts, and it will be a lot easier for you guys then to actually visualize everything. Now, the second indicator that we're going to show you is pivot points. Here we go to pivot, and what we use is pivot daily time. Now, there is a lot of daily pivots. Here we have just one pivot daily mid time, midpoints. What we use is pivot daily time. And the settings, if you guys are using Fibonacci Trader or copy of it, the settings, the only thing we need to change is the open time need to be set at 4, closing time 3:59, and it doesn't matter what time you're using on your computer or on your software. It doesn't matter if you live in New York, Spain, Japan, Australia, LA, it doesn't matter. Settings are the same. Now, if you're using different software, you need to make sure that your pivots will start at midnight Eastern time. Other softwares, you can tell when the pivot need to start. Well, this is with the FibTrader, we're doing pretty much the same. It's just that the server is using different time, and this is how we're setting. We need to set it from open 4 o'clock and close 3:59. So if we look here, I'm at Pacific time, and my pivots start at 9 o'clock, which is midnight Eastern time. And this is what we want to see. We want every pivot to start at midnight Eastern time. And this is how you can check. On my time is 9 o'clock p.m., which is midnight Eastern. Now, I will explain what all those colored lines mean. You can see that we have one red pivot in the middle, and we have a sky blue, light green, dark green, and we also have the same on the bottom. Well, the light blue is resistance 1, then we have resistance 2, resistance 3. Below the middle pivot we have support 1, support 2, support 3. And what do? We never use any of the indicators, either the MACD with the MACD divergence or the pivot lines on their own. Now, we always want to have any kind of convergence. Now, here, this is a very good example where we had that MACD divergence, and we said that there was the possibility that actually price formed that bullish Gartley here. And this was the D here at 146.90, and that bullish Gartley was on like 1 hour chart. Well, look at the pivot. Now, support 1 is converging at that same exact level. Now, what is actually the pivot? The pivot is support and resistance area or levels that are calculated every day based on the previous day open, high, low, and close. So based on the way price moved during the last 24 hours, those pivot lines or pivot points or pivot levels, they can predict resistance and support areas for the next 24 hours. And by saying predict, don't think that this is some kind of magic or anything. Now, pivot levels, and you can see how well they work, because here price reversed, then it bounced at the middle pivot. And you can see that pretty much there was no other resistance or support area here. Price just stopped and broke, and it continued to consolidate over this level. Then it took off. Well, those levels work so good because a lot of traders around the world use pivot lines, and they use pivot lines for limits or entries. You'll see a lot of people who use the pivot lines as limits, or what I mean is they will buy, like if they bought that Gartley, they will say, okay, pivot line is coming, I want to take some of my profit. And those guys, most of the time, those are institutional guys, and they will take partial profits at each of those levels. And this is why those levels work so well. Here, look, price was in such a strong uptrend. Here, it stopped for the day close to a pivot line. Here, made the daily high also close to a pivot line. Then here, made the daily low at a pivot line. Is that coincidence? Those are main level that we need to pay attention to. See, here, price bounced perfectly off this level. Here, again. And of course, it will never work perfectly, but see, here is such a nice consolidation right at the pivot level. Again, here, perfect bounce of a pivot level. Here, price stopped, then broke the pivot level. Now, and when I say that they work well, you will see all those, when if I zoom out, you will see, let's say for the next day, we'll have again 7 lines. Which one do we choose to use? Well, I'll give you an example. If we know we're trading in a bullish trend, what we do is we'll pull our fib, and what we're looking for is usually convergence between fib level and pivot line, or like here, if we have MACD divergence, where was far back, where I was drawing, we have MACD divergence, and then price formed the low at the pivot line. We're looking for some kind of convergences. Let's say we see a Gartley, and the D that we need to buy or sell is converging with pivot line. Well, that pivot line will give us additional confirmation. Or how else can we use pivot line? Let me give you an example. I'm using pivot lines sometimes for a stop. For example, let's say I had some pattern or some reason to believe that I need to enter at this pivot level. Well, below I don't have any other support levels because price was in a downtrend. And I have absolutely no idea where to place the stop unless I trade with candlestick formation and place the stop below the candlestick formation. I can't place a stop. And if I want to enter at a certain level, where will I put my stop? Well, what I would do is I will look for the next pivot line and I'll place my stop below, because for me to have some kind of reason to buy this level, probably here we had some kind of support, maybe some kind of convergence. This is some kind of support for me to be buying that level. Well, this pivot line is also support. Now here we have one support, here we have a second support. My stop goes below. Is my stop safe? Of course it is. Can I get stopped out? Well, of course. If price continues and blows through my entry, I'll get stopped out probably. But if this entry was good, I had my stop at safe place. Now this is another way that we use pivot lines. We can use them to protect our stops, or we can use them for entries. For entries, we use them with convergence of fib levels, convergence if we have some kind of pattern, maybe butterfly, right shoulder of a head and shoulders, maybe Gartley, any kind of pattern that has Fibonacci convergence, or for intraday trading. Now, how do I use pivot lines for intraday trading? Well, here, price is making lower lows. I pull my fib from the A to the B, for example. I have 707 converging with that pivot line. Oh, that 707 will be my entry. Where is my stop? My stop will be above the A. Where is my limit? My limit is above the B. Here is the A. Here is the B. I'm buying 707 because it's converging with the pivot line. Price forms the C at this level. My first limit is before the B. My second limit is 786 converging with the pivot line. Was this a good intraday trade? 40 pips first target, 60 pips the second target. Now if we use this high, again, we have trade 2 convergence with the pivot line. If I enter trade 2, where do I put my stop? Above the 1618. I'm sorry, above the 618. And again, this is the entry. Trade 2 converging with pivot line. We're entering at the C. Target 1, B. Now target 2 will probably go somewhere lower because we have bigger swing. As soon as my first target is hit, I will move my stop to break even. Now in this case, when I use the bigger swing, because different traders will use different swings, I'm just trying to show you that, because some people would say, okay, but how do I know where do I pull my fib? Well, if the trade is good it wouldn't matter where are we going to start and end your fibs. A lot of people are very if I can say particular for their fibs, they want it to be perfect. They're starting from the top of the trends, and they'll start pulling fibs from this swing, from that swing. Oh, there's one thing. If there's good convergence, price will bounce no matter what. Now, if we use that swing, price still hit the first target, then stopped us out at break even. Now, on the next day, again, if we're in a downtrend, I don't really have any convergences. Even if I did have nice convergence somewhere high, price never came all the way up. Probably we didn't have any entries, but there is so many pairs out there. Well, for fib trader, the question is, why do we use open 4 o'clock and close 3:59 for a fib trader? Really, I can't answer that question. If you guys want, you can call fib trader to ask him why this setting needs to be done like that. But what's the effect we're looking for is we want the fibs, the pivot lines to start at midnight Eastern time. And for some reason, I'm not sure what kind of server and where is the server set on and on what time, but when we put as settings 4 o'clock, and this is 4 o'clock in the morning, and 3:59 for close, the pivot lines are starting at midnight Eastern. And this is what we want, bottom line. We need pivot lines to start at midnight Eastern. And again, I said, it doesn't matter, it does not matter where do you live and what time you use on your computer. You need to have exactly the same settings for the fib trader all around the world. But if for some reason your fib trader is showing different pivot lines, play with it. Just make sure that your pivots are set from midnight to midnight. So we're using pivot lines to guide us for entries because those are good resistance and support levels. If they are converging with fib levels, this is even better. This is good to hunt entries and of course limits. Like here, when we use the smaller swing, did you guys see we had perfect convergence here of the 127 and the pivot line. And also, do you guys see something else here? I just saw that. Something that we were talking about. Bullish MACD divergence. Price forming lower lows, MACD higher lows. What did the price do? Turned. It hit the pivot line, MACD divergence, 127. Now those are too many convergences at the same point. This is too much. First we have the fib, we have the pivot line, we have the MACD divergence. Well, there's nothing left for price but to move bullish. That's right. And why did this here work so well? Well, first, we had too many groups of traders that were doing pretty much the same. Now, first, what I would have been doing if I was trading is, well, like what I told you, I would have sold here my first target, then my second target would have been somewhere around the 127, and I told you this before. Well, when I sell, what is my limit? My limit is a buy order. When we sell, the limit and the stop are buy orders. So I will be buying somewhere here at 151.10 probably. I will be buying so I can leave my position. So FXRVS is buying. Then somebody saw that pivot line and that MACD divergence, and he said, he is MACD guy, somebody who's trading based on MACD with pivots, and there is a lot of strategies based on MACD and pivots. Well, the MACD guys are buying here. So we're buying. The MACD guys are buying as well. Well, if I place a couple of moving averages, probably we'll see a moving average cross somewhere here. I'll just try it out. I know a lot of people are trading 13 and 5 crosses. I'll just experiment. Okay, this one will be red, so we can make the difference. Okay. See, where's the cross? Here. Well, those guys probably will be buying too. Now we have the moving average guys are also buyers. Oh, I can't think of anyone who will be selling here in this area. Well, of course price will move. And it did for a full day when something else happened and everybody started selling. For this is intraday trading. In order for you to be day trader, you need to be in front of your computer. As long as you stay in front of your computer, you can't really, as long as you stay in front of the computer, you can use the strategy. It doesn't matter when you're trading. As long as you're in front of the computer, you can do it. Now, if you want to stay in front of the computer for 5 minutes, find a Gartley, set up the Gartley and leave, that's a different story. But if you're going to stay in front of the computer, do it as a job, be a day trader, well, of course you can use this strategy. But if you're not looking to stay in front of your computer, you can't really do it. Now, it is riskier, but you can set up, if you find a setup like this, what you can do is, and I've done this sometimes, but I would set up an entry when I find, let's say, I'll move the charts back, but I find the low, I pull my fibs, and then I find the convergence. Well, when I find a convergence, it doesn't matter if price is here, here, or here. It won't change my entry. I will still have my entry here, my stop here, my first limit, and my second limit. So in this case, in setup like that one, you can place an entry, limit, and stop, because we know that the stop needs to be somewhere at 152, let's say, or 2, with a sell at, I can't see it very well, but I believe it's 151.65. The number is right up at the line, and target 1, let's say 151.30. I'm just punching the numbers. And then target 2 is 151, let's say 10. Now in this case, what I would do is I would place an alarm at target 1, so when price moves, takes me in and hits target 1 here, I can go from my phone and I can move the stop from 152.02 to 151.65 or break-even point. And then it's only a matter of waiting, because if price does not fill my second limit, I don't want to be losing those pips that I made, because price here can bounce and hit my stop. If it does, I want to protect my profits. I don't want to leave it out there, because we're day trader with this strategy. Well, with most strategies it is the same what we do, but here the risk is even higher, because those are small swings and price can always bounce or make higher wick, something to take us out. So with day strategies like this, it's very important for us to move the stop to break even as soon as we can. Do you guys have any questions? I want to make sure I've answered everyone's questions. A quick the question is to do a quick euro dollar analysis. Let's do a quick euro dollar. Just give me a second so I can load up my chart. The question is if pivots are more effective in any particular session. Maybe during US session, pivots will work better. They will work in any session, but I mainly use them during US session, maybe also UK session. Now here is 4-hour chart, and I'll zoom out so you can look also as a daily chart. What we see is here we have 618 with 127 convergence. This is at 126.30. Also we have another convergence all the way up at 128.30. So those are our two resistance levels at this time. So we'll watching both levels. $126.30, $128.30. Good convergence, good path support becoming resistance. We don't need to go anywhere. Now what we can see forming, I'll zoom in. Here, if you guys are noticing, price is trying to form bearish head and shoulders. A left shoulder, right shoulder is expected somewhere at 126.60. This is very close to this resistance area. Now price tried to break the resistance, couldn't, fell off. Now is retesting that level. Now what we'll do is we want to see bearish candlestick formation here, or another pattern of smaller time frame. What I mean is, now this is 126.60, where we expect the right shoulder, right? Right shoulder at 126.60. Now what do we do? How do we trade this? Here, where is the head? The head is at 127.22. If we want to place the stop, it needs to be somewhere at 127.30. I'm sorry, 40. Not too bad, 80 pip stop. But do we know if price will reverse or will continue this? We can see that very, very strong bullish trend. How do we know? I'm putting MACD, the pivots. Here it won't look very good on this time frame. Now we can already see price here forming bearish MACD divergence, and this is what I was talking earlier. That price has formed now, even from this lower low, already is forming that MACD divergence, and we have missed the center high, or where the drop is starting from, or the head. Now we're looking for another opportunity. Now price is retesting, probably will form right shoulder. Well, this is where we'll sell, because what the MACD will do, it will come back and then we'll continue. Now if the MACD moves up and crosses again bearish, or makes another curve like this, like the one here, or this one, what I mean is moving bullish and crossing again, This is indication that price will continue to trade bearish. And what we'll do is we're going to 60-minute chart. Let's see if we can find anything. I'll delete everything here. Now, 2660. Now this is the level of the right shoulder. What do we have? Support 2 converging with the right shoulder. That's 1. What else do we have? I'll pull my fib. What do we have? 618 converging with the pivot line with the right shoulder. Now, is this good confirmation or what? Now, if you guys need anything in addition to that convergence and also that MACD divergence that we have, you can see the MACD is just saying price needs to go lower. Price is moving bullish, MACD is saying, oh, it ain't gonna happen. Price is going down. Now, all we need in this case is wait for price to go here to 126.60 or wait for the next curve. I'll make sure that the MACD does not move higher than this level or the previous curve where the price was at its highest point. So we don't want MACD moving above. If MACD moves above this level here, that means that price most likely is to continue to trade bullish. If the MACD turns bearish below that level, or we can see the cross, even if price is not all the way up here, we can still sell, because a lot of times we can see on a head and shoulders the right shoulder being formed at lower level. So if you guys see a bearish cross on the MACD and price not up all the way up there, it's time for us to sell. Now, is there any other level that we might consider selling? We know that here we have 618 with the pivot line, the support 2. Here, the convergence is not very close, it's within 5 pips, but it's still close. 5.0 with support 1. This could be another level that we might think of selling. So if price climbs up to here and we see that MACD crossing bearish, well, it's time for us to enter. Where can we place the stop? Above support 3. Pivot line, above the pivot line. If price climbs to the 618, well, we can probably place it all the way up here. Another technique you guys can use to confirm the entry if you need additional confirmation is, well, wait for bearish engulfing candle to form somewhere here and enter based on the candlestick formation, and then place your stop above the candlestick formation. So I would say from now stop 127.36. So 126.57. 57, target 1 Let me see. One 20. That should be 25. And this is our trade. Sell at 126.57 with stop 127.36, target 125.72, target 2 124.75. Well, I will pull fibs from, let me give you an example. I still want to manage to see what the main swing is. I wouldn't pull fib just between those two levels when price is moving up. Between those two, there's no point of me pulling fibs here, because the main swing here was this one for the intraday. This is our main swing. I'll pull fib, of course, over those two, low and high, and I have convergence of 3, 2, and the pivot line. Then when we move bearish, now this is the low that we need to trade next to in order for us to form the head and shoulders. There's absolutely no point for me to be pulling fib here. This is my swing. Now, also, if I'm trading London, or I'm sorry, when I'm trading US and I'm day trading, what I will do is I'll pull a fib for London. Let's say, when did London open? Well, London opened here. This was the low for London. This was the high for London. Then we had a pullback. US did that move. Do you guys have any more questions? I know a lot of you guys have sent me emails asking about trading plans, strategies, how to build different strategies, how to build a trading plan. We will be hosting seminar on August 9th. This is Monday. This is for the Monday class. It will be a long 2-hour class, and we'll be talking about what is the difference between trading systems, trading strategy, how to build the trading professional trading plan, We'll explain you how to build a trading plan to fit your needs, the difference between a system and a strategy, the difference between a trader and a pro trader, and what different the pro traders do. We'll explain equity and risk management, risk-reward ratios, how to properly filter trades by using risk-reward ratios, how to build a trading plan, and also when most of you guys lose, those losses can hurt you, but why those losses can't hurt the pro traders. There will be a lot of questions to be answered in this class, and also after the class, if you guys buy premium tickets for this, we have 2 tickets. The one is for $99, the other one is for $59. If you have the premium ticket, you will be able to do half-hour one-on-one session, and we will build a personal trading plan for you based on your trading strategy and your trading style and your equity that you have in your account. We'll tell you exactly when to pull the trigger, how much, where to place your limits, to make your rules. We'll help you through all this. Now, we've noticed that most traders don't use trading plans, and most of the traders who are not consistent in their trading, or their accounts go up and down all the time. The main problem for this is that traders are not using trading plans, and this inconsistency can be healed by one professionally done trading plan. Here I will post the link if you guys want to take a look and read and see what actually we're going to do on this class. If any of you are interested, there is also limited seating because we want to make sure that we can work with all of you guys. And don't forget, after this class, you will have one-on-one session with us so we can build your plan. If you guys have any questions about this class, please email sales@forexsimplified.com. Send your questions and we'll make sure to answer everything. And I want to thank you all for joining me tonight. I will see you all next Monday for the next class. The next class will be about converging patterns from multiple time frames. It will be an important class. I'll be glad if I see you all guys again. Thank you and have a good day.